Good morning, friends. I have an update on a company called GR Infra Projects Limited. It has emerged as the selected bidder for a project. This project is for a development of a uh, lane road controlled through Agra Gwalior Greenfield Highway, starting at a particular village in Deori, Agra district, and to design 88 kilometers near Susriya in district Gwalior in the state of Uttar Pradesh, Rajasthan and Madhya Pradesh. The second section would be overlay stretching other road safety and improvement works on existing Agra Gwalior section from 1058 to 1148, which is the length of the stretch of the Agra Gwalior highway. Design change at certain sectors of the road of NH 44 in the state of Uttar Pradesh, Rajasthan, and Madhya Pradesh, and this is on a pattern BOT toll mode under NHO scheme. The total contract value is 4,262 crores, and the mode of collection of this would be from the toll. So contract term is 910 days from the appointed date, which was yesterday. So GR Infra Projects current price is 908, correction of 5% yesterday, 8.5% correction in the last 5 days. So overall 10.82% correction in the last month. Last 6 months, the stock has lost about 45.5% value and an overall negative uh, return of 27.5 in the last 1 year. The company has reduced its debts. The stock is trading at 1.11 times its book value. Company has shown good profit growth of 36% in the last 3 years. The company has significantly decreased its debt by 336 crores. Company has maintained healthy ROE of 23% in the last 3 years. Our good ROE maintained for 3 years, 26%. Healthy interest coverage ratio of 23, which is amazing. Limitations: company has shown poor revenue growth in the last 3 years, 2.44%. The company has delivered poor sales growth of 11% in the 5 years. Earnings include another income of 600 crores. So 600 crores earnings as income is something that we need to further look into. The reason of that is unknown. The industry average of PE is about 19, and the company has a PE of 9.36, which is something that is makes it a good value addition to your portfolio. The price book value is 821 and the price available in the market is 908. So this particular company is something that it's not really in great demand. So return on equity 15%, return on capital employed 16%, slightly different figures from a different website. Sales growth again 2.4 for last 3 years, which is very poor in relation to its overall growth and performance. The last 1 year saw a negative sales growth of 4.5%. Promoter shareholding is 74.7, which has reduced about 5% in the last 18 months or 2 years, while that of the public is 3%, FI is 2.5, DI is 20. So the strong point about this company is that the price would be less volatile because 20% of the shares are held by the institutional investors. Locally, the foreign investors is 2.5, which is very low. So we'll keep the price steady of this stock. However, because the returns aren't great in the last 1.5 2 years, there is pressure on the stock and its price. So the important point is revenue growth has not been there for the last 2 years, 3 years. That is the only concern that is driving a negative sentiment in the market towards this stock. So, return on assets 22%, which is good. Current ratio is 2.5. Quick ratio is 3. It tells us how much profit return. So the last 12 months TTM is 199. which seems to be amazing compared to the stock value of the price. So 199 as EPS per share is like 25% of the value of the stock, which is an amazing return. So it's a good stock to have in your portfolio. However, please consult an financial broker advisor to understand whether it's something that could add value over a period of few years. So it is definitely a stock considering for a long term. However, the financials are really what needs to be looked at. So possibly of keeping a check on the track record of the company and seeing the kind of projects that it has completed, whether those are government enabled projects. So if they are government enabled projects, how long the projects were taken to complete, were they in as per the accordance of the contract term. So those things play a vital role in gauging the overall outlook of the company for a long period of time. So little bit more analysis and little bit more understanding would be required to study this stock. So inventory turnover ratio of 0.35%. Interest coverage, we've already covered this 27, which is amazing. Long-term debt zero, total debt to equity is about 0.5%. Asset turnover ratio is 1.85%. Market cap 8,800 crores. Cash 410 crores. Debt 738 crores. Yes, so the reason why the share price has recently fallen due to decline in revenue and EBITDA despite a rise in the net profit and a broader market underperformance. So basically the broader market underperformance is what is causing the stock to uh, lose value because the chances of growth in this sector based on the kind of projects that the company does, that is what is the overall cause of decline. Probably government projects, infrastructure projects, roadways are the major concern here, and possibly the overall sentiment has been a negative in this sector. So mixed financial performance, that is again another concern. Declined revenue is what we've already discussed. That is one of the major important features. EBITDA decline, earnings before interest tax and fell by 27%. So 370 crores is a huge amount. That is one of the major reasons why the stock has not done well and it is underperforming. Sector is underperforming with a 3-year return of minus 33 compared to Nifty mid cap. So overall, the performance of the mid cap segment that the company falls in, that is better than this particular benchmark of this particular index. So it may be something related to benchmarks of these specific infra projects. That could be one of the reasons that is impacting the stock. 52-week low, ex dividend rate. So the stock price also fell on the dividend rate. So possibly the market was expecting a higher dividend and it did not fulfill the market expectations, which led to a further fall in the stock price. So two things that we have to look at, two three things. One is the revenue growth. Second is the uh, interim dividend or the dividend that the company provides at the end of the year or during a year. And the third thing is increase in the net profit. And overall, the fourth point you can also consider is the uh, benchmark of the particular segment that the company falls in apart from the mid cap segment. So project win 4,262 crores from National Highways Authority of India. So this is the uh, like a government project offered to the company. So further investigation and analysis is required into the kind of projects that it has done. diversified into power transmission sector. So diversification will have to look what is the outlook for the project that is done or it is currently undertaking. Market cap, this has changed from 9,200 crores to down to 8,800 crores. It was incorporated in 1995, leading construction company, has designed and constructed over 100 road projects across 16 states. Its principal business of civil construction, 90% of the revenue, EPC, BOT, HAM projects in the road sector, and EPC projects in railway, metro, airport runways, and optical fiber cable projects. Apart from road construction, it has also ventured into power transmission business as a diversification strategy. 10 operational assets, including one NHA annuity project, one state HAM project, and balance 8 NHAI HAM projects. Transfer to Invite. GRL is an advanced stage to transfer 7 of its operational assets to Infrastructure Investment Trust. Grill will receive listed invite unit against the transfer of 100% stake in these assets, which will further enhance its financial flexibility. As indicated by the management, the InvIT will have a lock-in period of 1 year from the date of allotment. Grill will also enter into a right of first offer agreement with NVIT, pursuant to which Grill will grant ROFO to thus invite, thus allowing the company to unlock its equity. Additionally, dividend income is also expected from the invite. Unlocking of capital via InvIT platform is also expected to aid Grill in funding of future equity commitments. The transaction is estimated at 2,000 crores. Manufacturing facilities, PMB emulsion facility and road signages. Udaipur capacity 30,000 metric tons. Metal crash barrier, Ohe mast and galvanization facility, Ahmedabad 24,000 metric tons. Emulsion facilities, Chandelier capacity 25,000 metric tons. Emulsion facility, Guwahati 30,000 metric tons. So integrated in-house construction model. The equipment base of the company comprised 8,000 construction equipment and vehicles. It also owns specialized construction equipment such as hot mix plants, soil stabilizers, mobile cold recycling mixing plants, and current spreaders. Thus, the company is less dependent on third-party equipment providers and efficiently manages its projects' execution schedules. Three road projects in UP, another one in Maharashtra, one in JK, and few more road projects in Madhya Pradesh, Karnataka, Telangana, Bihar. Strong order book of 20,000 crores. Plant-wise distribution: NHAI 83, others 5, NHLML 4, NHPC 8. Bagged a new order from, okay, that is sometime last year, that's an old news. 23 road transmission projects are operational. NHA, NHAI, NHIDCL, PWD, UPEDA, MORTH, NHLML, Rail Vikas Limited, REC, NHPC, okay, charges by CBI, okay, corruption charges. Investigation is going on in the incident of the bridge settlement, one of the GRLs under construction HAM project housed under SPB GR Galgia Bhadraganj Highway. So this is excessive water flow in the river underneath. So while no human casualties were reported. Okay. This is the current position of the stock as of yesterday. This is the position as of the last 5 days. 11% over the last 1 month, 45% over the last 6 months. 27% down over the last 1 year. All-time low, all-time loss of 47%. So the price of the stock when it was listed was much higher, about 1700, as you can see, when it was listed on 23rd July 2021. So it has lost a significant amount of value since the time of listing. So probably the stock was overpriced, and because it's not been able to generate sufficient revenue growth and profitability, that is the reason why the company has lost so much value. This is the logo of the company. These are some of the project pictures of the work that is done by the company. This is undergoing project picture. This is another undergoing project picture of the bridge, construction of a bridge. Another tunnel, roadway, expressway. Another expressway completed recently. Some pictures about the project works that it has done. Market value, shares, stock PE of 0.4.6, face value 5 rupees, price to book value of 1.16, cash, debt, and EPS 199 as we discussed earlier, promoter holding of 74%, sales growth, negative return, ROE 31%. This is the range, yesterday's range that you see. This is a 52-week range from 900 to 1860. All-time range, not very clear. Volume of uh, 13,25,995, which seems to be pretty high for a company with a low public, uh, for a company that has low amount of public investors. So something still to keep a track of. Volume is what would drive the overall sentiment of this company. Pivot levels, this is based on the trading activity of yesterday. Support level, uh, the growth level possibility of average of 950 on the short term. Okay, moving averages 5. So you can see in the last 5 days, they lost about 70 odd rupees, 10 days about 100 rupees. 20 days. So there is likelihood that this stock could recover some of its recently lost value. So looking at least 950 over the next 2-3 days. So possibly as of the company achieving this today itself. You can see 1 week, 1 month, last 3 months 41%, year to date minus 38%. Exactly 1 year is about 27%, 3 years overall loss of about 37%. Volume analysis, this is as of yesterday. 1 week average is about 4 lakh shares. So the highest trading volume activity was yesterday. That is the reason why there is a bit of a concern, possibly loss of value, which is impacting the stock overall. Two of the GR Infra projects previous returns in March are positive, which is a good sign. Likelihood of having a positive return Q4 FY25. Shares gain 2.4%, project worth. So this is what we discussed about earlier. So the sentiments as per Money Control website suggests to buy. 0% hold rating, 0% sell. So it's a clear sentiment that buy and hold. This is the all-time high rate of 1842 on the 26th of June. Then uh, volume chart, you can see 979,000 shares traded on the 22nd of August 2024. High stock P of 23 as of May 22nd last year, 2024. Some comparative peers in the industry: NCC, Ircon International, Kalpataru Projects, Techno Electric and Engineering, ITD Cementation, KPI Green Energy, PNC Infratech, HG Infra Engineer. So you can see the prices vary from 300 or 250 to 1000, 200 to 1000, and some market cap of companies almost to 15,000. So a good comparison between the various different peers in this industry is what you can look at. You can see the price to book value. Most of the companies have a low price to book value apart from KPI Green Energy and ITD Cementation, which are as high as 4 and 5.5. Stock PE, you can see uh, some of them range from uh, 15, 16 to an average of about 28. You can see the high of 33 for Techno Electric Engineering. So the best P available in the market is for the GR infra projects that we're just currently discussing. PS is something that you'll have to look at depending on the value of the share and the book value of the company. Return on capital employed, I think GR infra is the best ROE and ROC in the industry. So the others range from 11 to 15 as an average median of the 10 companies listed here. So company has shown good profit growth. Company has significantly decreased debt, maintaining healthy interest coverage ratio. PEG ratio is 0.03, efficient cash conversion cycle of 37 days, which is excellent. Healthy liquidity position with current ratio of 2.5. So this has changed to about around that 3ish, between 2.5 to 3 mark. Reduced debt. Yeah, this is all what we have covered. The important thing again here is other income of 600 crores, which again makes the company volatile on the profit and the net revenue perspective. So other income is what drives the negative sentiment based on the previous quarter result, that is Q3 FY25. This again some additional companies to compare. Most of them were already there in the previous comparison. You have addition of rail because and FCON's infrastructure, possibly maybe a larger business segment, uh, more different projects of business compared to the previous comparison through another site. So market capitalization you can see quite high. Railway price is based on railway projects, and FCONS probably also has multiple lines of business that it functions in. ROC best by ITD's cementation 27% based on the latest results updated. You can see sales have been erratic. They have dropped from 2,500 crores to 1,700 crores, which is the reason why the sentiment of the market is negative. You can see sales again in the last 1 year have dropped and likely to drop further in the last 12 months. It's only 7,600. So it seems that the stock is going to further correct when the results of FY25 Q4 are announced. So if the revenue reduces further from the last year's results of 9,000, it is going to impact the overall sentiment again. So this is something that we'll need to keep a track of. A good chance to invest once the stock corrects, maybe end of April, early May is what you should be looking at. If there is a further correction in the stock, it would be a good time to invest from a long-term point of view. However, please consult a financial broker before making any decision. Uh, some values for you to look at. We've already covered some of them, however, this is the broader trend based on 1 to 10-year period. Stock price negative of 30% 1 year, 14% in the last 3 years on an average. Compounded profit growth minus 19% in the last 1 year. That is what matters. Sales growth of minus 15 in the last 1 year. Return on equity, that seems to be good. However, the growth or the overall growth in the segment and the market has been negative. Some things for you to look at. Profit has grown to 132% based on the other income of 600 crores. Net profit has grown. However, the important point is that the revenue and EBITDA has negatively impacted the stock value. ROE, it has improved year on year. From the last 5 years it has been stagnant, steady, over 24%. You can see again this is improving, which is a good sign. Debt to equity excellent. This is also good. Should be around 10 and it's about 10.5. Interest coverage ratio excellent. Efficiency excellent. Reserves 7,900 crores, which is good. Borrowings have increased. However, over the last 1 year it has decreased 1.5 years. So overall a good sign. Improvement in the ratios. Debtor days reduced. Working capital days is a little bit of concern. It's growing, possibly because of uh, unsold projects or uncompleted projects or delay in project completion, possibly based on the timeline of the project completion. So the longer or the bigger the project, likely to take further time to complete, which could be one of the reasons why the working capital days have increased. This is the overall view of the shareholders. So far seems very good. Breakdown, no shares pledged, which is excellent. This is the record date or dividend. So the reason the stock has plummeted in the last 1 day or 2 days is based on the interim dividend declared by the company, which is the concern here. This is an old update, 79%. The current update is about 74%. Then these are the private investors or the institutional investors, which stands about 20 odd percent as shown in the previous graph. So that is it, friends. From this stock point of view, we'll connect with another report, another stock later in the day today. Thank you for watching. Please share with your friends, relatives, and associate and family members who may be interested in going through this information. Thank you.